Well, well, well. Happy Wednesday, January 20th. It is Thursday, January 29th. I'm still stuck in the past. So today we had a market dump off open. There was a bearish SMT. What an SMT divergence is, or smart money tool, is when one of the two indices, we have gold, but forget gold. When ES and NQ, they're very correlated, become uncorrelated. As you can see, let me go to the 1 hour. You can see it very clearly that these highs took out this. These highs did not take them out. I could draw a trend line for you. You'll see this upward ascending and downward descending lines. This is called a bearish SMT. When price is going to go down because buy side's been swept, we're now going to go down. That's called a bearish SMT. The bullish SMT would be down here on sell side and discount when ES or NQ sweeps more sell side than the other. So in this case, ES took the high time frame highs here. And you can see that NQ, this wick could not take out these highs. So on the 15-minute, very clear, very, very clear. That was middle of the night during London session that these highs were created, about 2 a.m., 3 a.m. Eastern. And what happened is it just held, and NQ dissolved and then just dumped. There wasn't any solid entry. You could have taken the 15-minute here. I believe this wasn't a swing high, though. A swing high is a 3-candle formation where the middle candle is the highest. So you can see how this was the highest. If this had a prominent wick, then we probably would have taken something like this, a very high time frame. It would have been in at 150 or so, stop loss at 190. So a good 35 to 45 point stop loss. But the play was after the dump, we took out a tremendous amount of sell side. We did not take out this low here, which could have been a protected low on the 1 hour. A protected low being a swing low that gets taken out by another swing low. So this is obviously a swing low, prominent wick, inside the same fair value gap. So I bet you this could be a target for tomorrow or next week that we come down, sweep this sell side liquidity, come back up on either or both charts. But what I wanted to talk about is if you are just getting started, I want you to check out the YouTube channel. Definitely subscribe. That would be appreciated. I don't have like many subscribers at all. Go to the playlist and go to the class recordings. There's about 5 hours in the class recordings of beginner stuff. How to get started, literally on the charts. What do the charts mean? How much does each point, each dollar moved on each chart? $2 here on micro NQ, $5 here on a single micro ES, and so on. It's all discussed in the beginner class recordings. You can take them one at a time. They do get a little repetitive, but I think repetition is what's going to build that muscle memory and have you really understanding the strategy, how to get started, what everything is worth, how to take your first trade, how to do a stop loss, how to input your take profit, when we move stop loss to break even, so then we're saving all capital. If the price were to come back to your fill, you're not losing nor gaining, neither losing nor gaining any money. So that's crucial. Other things would be to go into the education section of Discord and make sure you look at the Learn ICT channel. In there are the Inner Circle ICT himself doing his 2022 introduction and mentorship. It's free. It's on YouTube. He coined the whole strategy. He's got over 2 million subscribers. He does rant, go on digression after digression, but I recommend you check that out if you're brand new. There's also a psychology section or channel where there's a couple of YouTube videos on just mastering psychology. Becoming a professional day trader means becoming a professional loser and how you react to losses. A lot of people quit, lose a lot of money, and can't make it back, lose their edge based on how they react to losses. So be sure that you are not one of those people that go tilt, that get super emotional based on losses. A lot of the time, And many people in the Discord, veteran people in my Discord, people who've traded years, still have a hard time understanding that not every day is a trading day. Okay? Sometimes we sit on our hands and we really should do nothing. I do get forced sometimes to take some trades because I do want to perform for my audience. And obviously, when you don't take a single trade in a day and when it gets boring, people leave. But today was a perfect example because we got into this long at, I believe it was 11, like quarter after 11. So a lot of people were pretty much giving up on the day. They had already, started to go to the gym, whatever. And this long just completely performed out of here. It displaced and it kept going. I mean, almost zero retracement, zero drawdown. My stop loss was not needed at all. And that's a lot of my trades you'll see in the trade recap channel. Definitely recommend you check that out. And my RRs being, typically 6 plus, my biggest being 22 or something like that. And the most points gained on NQ in a day, 531. So if you're new, you've come to the right place. I will say that January has been a tough month. In hindsight, there's been plays, there's been trades. You can see where price moves, but getting in has been a tricky thing for this new year so far in January. I am anticipating a better month of February. We shall see. I think with gold hitting and keep hitting all-time high, there's something going on with trade devaluing the US dollar. You'll see the Chinese yen has gained a lot of value and power, and the Chinese actually devalued their yen back in history to also promote better trade for them. So I believe this is Donald Trump's administration and the institutions wanting to devalue the dollar to help with trade momentarily, because we still are on a pretty bullish trajectory, as you can see, even with this pullback. So what else? Definitely take it slow. If you are getting started, paper trade, use fake money in the simulated real world data of the market. The beginner classes are going to tell you to get TradingView an account. You're going to want to get more of a premium account subscription because you'll want numerous charts on the screen, at least 2. You'll want to get down to the 30-second and 15-second chart just to see activity. But lately, we've been taking 1, 2, 3, 5-minute inversions. We want higher time frame confirmations, bigger stop losses, smaller RR. You can still get a lot of points, though. The reason for that is because of the manipulation we've been having. A lot of people are day traders now. There's a lot of retail traders in the market, and quite frankly, the institutions are trying to take their money, and we don't want to be part of that. So that's pretty much it. I'm staying very optimistic on how the market's going to look for the future. I think we have a lot of bullish room left. There will be a correction. Don't get me wrong. If you look at Bitcoin, it's dipped a bit. It's 84 currently right now. And I did mention, and I have for, oh my goodness, over a year now, that 74,000 on Bitcoin is going to get hit. It is. There's even a pronounced daily and weekly swing low wick at 59. So if I were you, if you're a crypto investor, if you're dying to get involved in Bitcoin, don't until it hits at least 74. You could start to drip money in, but I think we're going to bleed all the way down into the 60s and potentially mid 50s. Who knows how low? Typically after all-time highs, we do retrace half of the value of the all-time high. When we hit 68 the first time, price went down to the 20s. You can look yourself. So now that there's a lot of brokerage and institutional involvement, however, I don't think we'll do quite as big of a dump. But again, the institutions are the ones manipulating the market, and they are the market makers. They are generating the liquidity. They can force Bitcoin to go down like that. It just takes someone, a market maker, to be buying all the way down, filling that order to send price down, down, down. Other than that, we're having a much heavier focus on gold futures. I like gold a lot. I wish I owned more of it. I have just very little physical gold. I remember years ago, 6, 8 years ago, 10 years ago, I was interested in buying some gold and just storing it because of fiat currency devaluation, it not being backed by gold, all of that, and crypto existing. It was another form of kind of hedging against the US dollar, but not going all into cryptocurrency. So we have some other earnings to hit. I think Apple, yeah, had earnings. Apple shot up quite a bit, almost went to 270 again, which is phenomenal. All-time high about 285, 288. It wicked up there, the body at 286. So Apple may be on its correction path now, going up. It looks like there was some news here. Record iPhone sales this quarter, great, strong demand globally. JP Morgan raised its price target to 315 for Apple from 305. So that's fantastic, strong iPhone 17 demands. So that's very bullish. So I think we're going to still creep up and take all-time highs, blast through, and then we'll see a bit of a correction. Do not let greed affect your trades, especially with day trading. With long-term holding, sometimes you just hold through the volatility, but with the day trading, you need to know when to get out. Obviously, we did over than a 50% retracement here on the day with NASDAQ and SPY, S&P and the NASDAQ. So I'd like to see, with what's happening here, I'd like to see a gap up at the new day open. We shall see in about 24 minutes. Let me think if there's anything else. Just some small stuff. I would encourage you to check out what the NASDAQ is comprised of and its values. So this is the NASDAQ 100. It goes for 100 companies. Believe that? Oh my God, 101 apparently. But they all have different weights. And this changes organically all the time. So NVIDIA holds over 13 and 2/3% of the NASDAQ. Then there's Apple, Microsoft, Amazon, and it goes by market cap. So when NVIDIA, Apple, and Microsoft start to dump, the NASDAQ starts to dump. Very few things are going to help hold it up. A lot of other stocks would have to blast through to control the NASDAQ, and that doesn't usually occur. So just, educate yourself on that, the 500 companies in S&P 500. Make sure you create a nice watch list over here of at least the top, 25, 30 of the NASDAQ companies. So then you have an idea of, is the market, mostly red, mostly green? Where is NVIDIA, Microsoft, Google, etc. on the chart? Are they helping to drive it up? One other big tip I recommend is you create a new chart, and you go right here, essentially, and instead of this, you would search Apple, and you would click that. You would keep adding, so you can actually add numerous stock symbols to one chart. So I actually have over here the Magnificent Seven. So in addition to SPY and the Qs, QQQ, which are the NASDAQ and the S&P 500, I have just a chart for the Magnificent Seven, the 7 most weighted companies in the NASDAQ. So Apple, NVIDIA, Microsoft, Google, Amazon, Meta, and Tesla. So those, I get to see how those are performing. Up against, right above it, are the Qs, or is the NASDAQ 100. So you get a nice snapshot there. So make sure you have a good chart showing you the Mag 7, Qs, SPY, individually, Apple, NVIDIA, Microsoft, Google. So you're always keeping an eye on those individual stocks. You can, after a while with this strategy, start to options trade. And you can swing some trades, throwing out an expiration far out. You'll pay a premium for that. It'll be expensive, but there's a lot of, it can be very lucrative because you can use this strategy on any chart, and time is merely fractal. So you can be looking at the 4-hour, the daily of Apple. And when we have a nice 3-candle inverse sweep of the sell side, and that's confirmation, you may want to see a little bit of a pullback, a little bit of a retracement, and then enter some options calls for a strike price above there, maybe 2 weeks from now, and cash out as soon as you're in 50 percent profit, something like that. Be disciplined. Always use a stop loss as well. So that's pretty much it. I don't want to get too repetitive. I definitely encourage you to go through the education folder, which has the class recordings from previous, Sunday night and Thursday night classes that we've held. The Learn ICT himself giving the lectures on the 2022 mentorship, understanding what traders should focus on. Also, terminology. You'll hear me say previous day low, BPR, BOS, DOL. You need to know what those acronyms or those abbreviations stand for. So, just for example, DOL is draw on liquidity. Where's price being drawn to? PDH, previous day high. PDL, previous day low. Things like that. OB, order block. So go through that a few times. You'll start to get it slowly but surely. And then there's a miscellaneous tab to show you the IFBG A plus setup. A breakdown of the A plus setup, a breakdown of how we don't trade support and resistance, we trade the reversals. And lastly, how much risk to take. How many contracts should you risk per how many dollars you want to risk. So if you're on, and we always trade micros because you can always take fractions. A micro is 1/10 of the mini in futures. You might as well take 10 micros rather than one mini, because on these prop firm accounts, you can take partials very easily. On a live account, it's a little more complicated. The fill price changes. But if you were to try to risk $200 on MNQ, if there was a 10-point stop loss, you know that you're going to be risking 10 contracts, because 10 times 2 is 200. Very simple, but I have that sheet for you. You can print it out, put it up on your wall, as well as the A plus model. There's some general liquidity patterns, like a swing, equal lows created, slanted lows, a range, trend line. That all helps. You'll understand LR, low resistance liquidity run. It's basically when price is just heading smoothly and cleanly into one direction, and then all of those highs or all of those lows will eventually be swept, because there's stop losses resting above or below all of those highs or lows, depending. And again, in the beginner class, all those beginner recordings, I go over everything in granular detail and get very repetitive. I also have a frequently asked questions tab where you can see all the different things. How long have I been trading? How long did it take me to become profitable? What indicators do I use? All that stuff. So, yeah, I hope this helps. Good luck. Stay humble, but be hungry to learn and make a lot of money. The last thing I'll add to that with making a lot of money is don't get caught up in what other people are making. You're going to see some people making thousands of dollars in a day, including myself. Don't let that affect your psychology. Understand that you're on your path, you're in your lane, and to stay there. Don't look to either side. You can encourage your community members. You can congratulate people, but don't let someone else's wins create envy or anger, or even for some reason fear, into your psychology, into your mindset when you come to trade each and every morning. Okay. Other than that, I am live every non-bank holiday, every time the stock market is open, by at least 9 a.m. at the latest. I'm trying to now get live around 8:30 again, although there's not a lot of moves that early. Just before pre-market, it's more London session 2 to 5 a.m. And yeah, just take it slow. Understand that, this is a very difficult zero-sum game you're trying to play with some very, very intelligent computers that are constantly adjusting and trying to get better, smarter, quicker. So, yeah, welcome and have a blast. Thanks so much for listening.